Bitcoin developer Anthony Guerrera forked the code behind Bitcoin Ordinals. This made it the first non-fungible token platform on the Litecoin network. This was likely done in response to a bounty of 15 Litecoin tokens to any developer who could successfully port Ordinals to Litecoin. The Ordinals protocol enables users to inscribe references to digital art into small Bitcoin transactions, creating Bitcoin-based non-fungible tokens. The protocol has been fairly successful, with over 153,000 inscriptions created in just over 3 weeks. The code is open source, allowing anyone to make changes and upgrade the code. This article provides a comprehensive overview of the forking of Bitcoin Ordinals to the Litecoin blockchain, including the process of forking, the recent public bounty, the success of Bitcoin Ordinals, and the potential impact on the price of Bitcoin. The article also highlights the open source nature of the Litecoin Ordinals, which allows for further changes and upgrades. Overall, the article paints a positive picture of the possibilities created by the forking of Bitcoin Ordinals to the Litecoin blockchain. Despite the recent regulatory pressures, investors remain neutral to bullish on Ether. This is evidenced by the improved derivatives metrics and the rise in the Delta Skew Index. This suggests that the odds favor Ether bulls, despite the potential impact of Ethereum's Shanghai upgrade. This article provides a comprehensive analysis of the current state of the Ether market, taking into account the recent rally and range trading, the impact of tighter regulations, and the potential effect of Ethereum's Shanghai upgrade. It is clear from the article that derivatives metrics remain neutral to bullish, despite the regulatory pressures, and options and futures markets point to pro-traders moving to a neutral to bullish sentiment. Overall, the article suggests that the odds favor Ether bulls, as investors remain calm, and the article provides insight into the various factors influencing Ether's market sentiment. Bbaco faced selling pressure at the February 21 Wall Street Open as United States stock markets opened down. This led to suspicions over whale movements on exchanges and bearish signals for the pair. Caleb Franzen, senior market analyst at Cubic Analytics, had a bearish prognosis for the S&P 500. The US dollar index dropped to 103.77 before rebounding. Chart analysis from Bbaco showed BTC price action acting within a narrowing wedge construction. There is a key area of support below stretching to $22,500. His longer-term forecast called for higher highs before a more substantial correction, potentially taking Bitcoin back to $20,000. This article evaluates the current state of Bitcoin and other risk assets in the US stock market. It notes that bearish signals have already been seen for BTC, with the 200-week moving average needing to become support for the cryptocurrency to change its long-term trend. It also mentions suspicions over whale movements on exchanges, as well as Caleb Franzen's bearish prognosis for the S&P 500, which is trading below his $4,080 line in the sand. The US dollar index is discussed, as well as the Federal Reserve's Federal Open Market Committee minutes, which are due on February 22. Chart analysis from Bbaco is also noted, which shows BTC price action acting within a narrowing wedge construction and a key area of support below stretching to $22,500. It is concluded that corrections remain relatively shallow and that BTC may reach $35.40k before having a harsh correction potentially back to $20.25k.